Ben, what are the risks to investors in an environment with higher inflation rates?
I think there are really two things to think about. I think, first of all, what's the impact on the profitability of the companies that you've got within the portfolio? And I'm very much coming at this from an equities perspective. So how will inflation affect the profitability of businesses? I think to that degree, I feel very comfortable about our portfolio. And in actual fact, I think we may even profit as a result of that. I think on the other side, you've got this potential increase in short-term interest rates, potentially an increase in longer term interest rates. And as we see both of those dynamics, that's likely to put pressure on valuation multiples. And so you've got this dynamic of perhaps higher revenues and higher profits, but at the same time, a higher discount rate, which is going to counteract that. And so, as ever, it's something of a balancing act between those two elements over time. As Nick talked about, there are going to be some companies which will directly benefit from higher interest rates coming through. There'll be companies within the commodity space which will benefit from energy and metals prices and so forth being higher as well. So, you can take advantage of that, positioning those within the portfolio. I think the only thing I would say is that as we do see interest rates go up, the idea of that is to slow the economy. Quite often, some of the companies most sensitive to interest rates from a positive perspective on their earnings are also the most cyclical businesses as well. And so you do have to weigh those two things against each other. It's not just as straightforward as this is a hedge, don't worry, it's a one-way bet. You do need to think about a number of the interactions that are playing out there as well. So I think, quite a complex environment for investors to navigate at the moment.
Absolutely, and you're quite right. It is a balancing act for investors, really. Nick, what are the risks to investors in an environment with higher inflation rates? I mean, obviously, we've just said that your shareholders would benefit from higher inflation.
Yes, I mean, there are quite significant risks in a higher inflationary environment. As Ben alluded to, higher interest rates historically have been there to slow the growth of economy, try and cap growth and inflation, and that has obviously consequences on growth and therefore earnings and profits, etc., for businesses. So if we saw inflation start to go back to the levels we saw pre-pandemic, and central banks are more confident about rising interest rates, then I have some concern about what that impact could be on markets, increased volatility, or as investors try and reposition their portfolios to whether it's move them more defensively or position themselves in those companies they think that will be, beneficiaries. So it's an area you've got to be, effectively watch the runes and see where it's going and be quick.
Absolutely. And Charlotte, what's your view on the risk to investors in a higher inflation environment?
Yeah, I would echo what Ben and Nick have said. I mean, it's very uncertain, and because we haven't had proper inflation since the 70s and 80s, the constituents of the stock market have totally changed. So you can look at how different sectors behave, but ultimately, lots of these businesses, these business models are new. So I think what's most important, and as Ben has said, pricing power, absolutely critical, not overpaying. So you're not subject to higher discount rates, really derating your equities. And then when it comes to debt markets, where we also clearly invest, I think conventional bonds are really for the birds. You will not get a lot of upside with yields at this level, and the risk of them, particularly in the short term, rising more. So in that area of the market, inflation-linked bonds are our preference.